Hello, thank you all for joining today. My name is Melissa Murphy, Principal with CLA, and I'll be walking you through the audit results for the fiscal year end June 30th, 2025. Today I'll summarize our audit approach, key results, required communications, and financial statement highlights. Here's our agenda for today. First, a brief overview of our audit scope and process. Then we'll walk through our audit opinions and required communications. We'll highlight key areas of your financial statements. And then towards the end, I've included a couple slides just on some industry insights that I won't go through in detail, but I've included them in the presentation for everybody's reading pleasure. Our audit covered several required components. The organization's financial statements prepared in accordance with GAAP. We have the reporting on internal control over financial reporting and compliance under government auditing standards. We have testing of internal control over compliance for major federal programs in accordance with uniform guidance. We have the review of the uniform financial report required by the Commonwealth. And lastly, our required governance communications letter, which we'll talk about here today. And also there's a formal letter we issued along with the financial statements. Just wanted to provide some additional context related to the timing of all of these reports this year, because I think we were a little bit later than we've been in the prior years. In order to complete our report on internal control over compliance with the major program requirements under the Federal Awards Uniform Guidance, the government pushes out a compliance supplement, which is what auditors use to audit those major programs. The compliance supplement was significantly delayed this year. The final report wasn't released until I believe the Tuesday before Thanksgiving, which delayed all single audits in the country, actually. And so we were not able to finalize any reports until that compliance supplement was finalized. We did have draft reports, which is what we worked off of. Head Start has been a major program for many, many years, and we were fairly confident that the compliance requirements likely wouldn't change. So we went ahead and did all of our testing on the same timeline we've done in prior years. Because of that delay, we went ahead and issued the report on the financial statements first in November so that the organization had those financial statements for any funders or grant reporting. And then once the compliance supplement was finalized, we were able to finalize the remaining reports. The uniform financial report, which is originally due on November 15th, had an automatic extension because of this delay to January 15th. The uniform financial report requires the single audit to be uploaded with it, so we had to wait for that report in order to submit the uniform financial report. So the remaining items were all completed in December, well before the January 15th deadline, but just wanted to provide a little bit more context as to why the dates look a little bit different than when you're typically issuing these statements in prior years. Our audit follows a risk-based audit approach. We focus our procedures on areas with higher risk of material misstatement. This includes evaluating your internal controls, addressing the risk of management override of controls, which we respond to by doing journal entry testing and an unpredictability test, reviewing significant accounting estimates, and assessing revenue recognition policies and practices. We do detailed testing over the various contracts as well as contributions. Throughout the audit, we combine analytic testing, professional judgment to ensure appropriate coverage. I'm pleased to report very positive results. For the financial statements, we noted no material weaknesses and we issued an unmodified opinion, which is the highest level of assurance. For federal awards under uniform guidance, again, no material weaknesses, and we issued an unmodified opinion on compliance. These results reflect strong internal control processes and an effective financial management environment. As part of our governance communications, we evaluate accounting estimates, adjustments, and any issues encountered. Your estimates appear to be reasonable and we're comfortable with management's methodologies. We identified a couple of routine audit adjustments, one to record in-kind donations and one to adjust the net asset releases. There were also a few adjusting journal entries that were provided by management subsequent to the start of the audit. Nothing unusual and very consistent with what we've seen in prior years. There were no past adjustments, so items that were identified during the audit to be immaterial to the financial statements that management passed on making. And at the conclusion of the audit, management provided the required representation letter. Overall, there were no changes to the audit scope. There were no new accounting standards impacting the audit, and no difficulties or disagreements, and no other findings to report. In accordance with government auditing standards, we issued a separate report on internal control over financial reporting and compliance, which I previously mentioned. And this report, again, did not identify any material weaknesses or reportable noncompliance. We also reviewed supplemental schedules A and B related to the Uniform Financial Report. These schedules are the responsibility of management and are not part of the basic financial statements. So we do not provide an opinion on this supplemental information. The next couple of slides will summarize the statement of financial position, statement of activities, and statement of functional expenses. I'll highlight a couple key trends and year-over-year shifts. Here on the assets portion of the statement of financial position, total assets increased from 7.35 million to 8.2 million, reflecting stronger liquidity and stable long-term investment in facilities and equipment. Cash grew significantly from about 3 million to 3.6 million, improving the organization's ability to meet short-term obligations. Accounts receivable more than doubled compared to 2024, and that's primarily due to just timing of grant reimbursements. Property and equipment remain to be the largest asset with a net book value of about 3.96, reflecting continued investment in facilities and infrastructure. Total liabilities increased from 2.41 million to 3.13 million. This was driven largely by a $690,000 increase in deferred revenue. This represents the Commonwealth Cares for Children, or the C3 funding that comes through the Department of Early Education and Care. And really, this was established during COVID to help organizations support operating costs. So the funding comes in on a monthly basis and gets put into deferred revenue and then is recognized along with expenses incurred. So as the organization incurs expenses that are already offset against existing funding, they'll recognize revenue here. So this is really driving the, of course, increase in current liabilities as well as the increase in assets related to cash. There were some typical routine changes in accounts payable and accrued expenses, which really just varies year over year due to timing. Net assets increased about 5 million this year. You're without donor restrictions landed at 3.2 million, and you're with donor restrictions at 1.8. So overall, the organization continues to maintain a strong balance sheet and net asset position. Total operating revenue grew from 9.24 million up from 8.27 million in the prior year. Your program service revenue includes all of your contract and grants received through the Commonwealth as well as the Head Start program. Total funding received from the Head Start program for 2025, or the federal funding related there, was just over $6 million, which is about 69% of your total program service revenue that you see here on the screen. Your contributed services and property increased from about $31,000 to $75,000, and your contributions increased from about $15,000 to $22,000 in 2025. Your net assets released from restrictions, so those items recognized in revenue in prior years and essentially used in operations in the current year, amounted to $167,000. Your total expenses increased to just over $9 million compared to $8 million in the prior year. We can review the statement of functional expenses on the next slide in more detail to see what's driving those increasing costs. But as I would expect to see an increase in expenses with the increase in revenue. Your overall change in net assets was $132,000 for fiscal year 25 compared to $154,000 in the prior year. So overall, Triumph had a pretty financially strong year with significant growth from an asset perspective as well as revenue. As I mentioned on the previous slide, overall expenses increased from about $8 million in 2024 to just over $9 million in 2025. Personnel costs, employee benefits, payroll taxes, those remain to be the largest expense category and significantly increased compared to the prior year. Direct program expenses also saw increases in areas such as supplies, training, transportation, and professional fees. Program services accounted for about 88% of total expenses, demonstrating a strong mission alignment. Management and general remained stable at about 12%. This is consistent with what we've seen in prior years as well, and I would also say fairly consistent with what we see in the industry across nonprofits like yourself are generally going to be in the, I would say, 75% to 90% range for total program service expenses. Thank you for your time here today. If there are any questions following the presentation, please feel free to reach out to me directly. My email and phone number is here on the slide. The next couple of slides include some industry insights that might be helpful to the group here. So if there are any questions or any additional information I can provide related to that, again, please feel free to reach out to me. Thank you so much for your time. And as always, it's such a pleasure working with Triumph. The audits always go extremely smooth. Nancy has been so wonderful to work with the last couple of years, and we appreciate your partnership. Thank you.